is this industry profitable? So the answer to that is yes. Why? Is because this is an affordable housing industry, meaning that people who do not want to spend thousands of dollars on a mortgage payment or apartment building can have a different option for a less expensive option. The industry has a need in it.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 341. Mobile home parks have become a very desirable asset class for investors. My guest today currently owns 20 parks and has created over $500,000 in asset value over the past year. Charlotte Dunford is the managing partner of Johns Creek Capital, which has raised close to $5 million from investors. Charlotte is also a first-generation American citizen and college graduate who left her home country of China with just her belongings at the age of 16. Charlotte, welcome to the show.
Thank you so much for having me.
Mobile home park investing is very, very interesting to me. I've had a number of guests, and I always love talking about mobile home parks. But before we get into that, tell us a little bit about yourself and how you started investing in real estate.
I came to this country at 16 with pretty much myself and 2 suitcases, but I had a pretty strong strive to succeed from the beginning. So I pretty much studied as hard as I could to get into one of the top engineering schools here in the South. And pretty much right after I graduated college and taking on my first corporate job, I started qualifying deals using my salary. After a while, that was nowhere near enough for my vision and ambition for real estate portfolio. I decided to start Johns Creek Capital early 2020 and quit my full-time job. I actually quit my job in early 2019, but shortly after, got together with my partner, started Johns Creek Capital. We actually have grown quite a bit, actually, since we have started. Currently, we actually have 26 mobile home parks and with over $4.8 million in investor subscriptions.
You studied hard to become an engineer, worked really hard, and then you switched tracks to start investing in mobile home parks. Like, what happened there to make you even say, hey, this is something I should consider?
I was actually graduated as a business major from Georgia Institute of Technology. It's a really top engineering school, but the engineering mindset never left. So with mobile home parks, I got into it because it was pretty much one of the only sectors that I was able to get into, because multifamily is very much a very heated market. At the time, everybody was doing multifamily, and the big boys of multifamily, they've been doing that for decades. For me, kind of a new investor at the time, just graduated college, I wasn't able to get into multifamily really, but for mobile home parks, the market was not extremely heated. I was able to get really good deals and really attractive terms still. So it was really a blue ocean strategy for me. And then the engineering thinking really, really helped me in developing our internal algorithm for our acquisition algorithm and our disposition algorithm, where those are the algorithms that we need internally to qualify our deals and decide which deal to sell.
Help us understand a little bit better what you mean by that engineering mindset and how it helped you with the algorithms and the internal procedures. Give us some specific examples.
So the engineering mindset is really a way to solve problems. So being an engineer just means, well, for me anyways, I think it means identifying a problem and then figuring out a systematic way to solve the problem. So that really applies to every single entrepreneurship job that you have. As an entrepreneur, you need that. So to develop the algorithm. For example, how do you acquire a good deal? That's an acquisition algorithm that we have internally to decide. So the engineering mindset really, it's all about developing a system. So that systems come from, 15 major parameters. This algorithm consists of 15 major parameters in determining whether a deal is a good deal or a bad deal. So each parameter has its own weight assigned to it. With that weight, we usually assign a score to that parameter with that weight. So that calculates a result, which would either pass the deal or disqualifies the deal. So that's where the engineering or nerdy part comes from. It's that you calculate that out instead of just saying, okay, that's a good deal because I just like the look of it. That doesn't really speak engineer, that speaks emotional. So you should never make an investment decision based on emotions. So that's extremely important. And the same with our disposition algorithm.
Can you take us through your 15-point algorithm? What are the 15 points that you're looking at?
So the 15 parameters actually a lot. So I'll go ahead and talk about some of the major parameters. So number one is the ratio between a park-owned home and a tenant-owned home. So a mobile home park is, in its essence, a parking lot business. So as a parking lot business, you're really running on the lot. You're not really a rental business that you want to get into the fixing furnaces and fixing water pipes. It's a parking lot business. So a park-owned home is pretty much when the park owns it. We own it, and we are responsible for the repairs and maintenance, capital expenditure on the home itself, which can be a lot. It's actually one of the most costly items for a mobile home park. So in a tenant-owned home, meaning the tenant owns the home, is kind of the ideal situation. They have pride of ownership. They take good care of their home. So you want the ratio of tenant-owned home versus park-owned home to be there will be a majority of tenant-owned home versus park-owned home. So that's number one. And number two, you have to look at the utilities. That's a parameter. So you want public utilities, preferably utilities billed back to tenants. So you're acting like a parking lot, not a utility company. You don't want to get into the business of being a utility company and paying for utilities. That's just a big expense. And number three is the general operational structure of the park, meaning that from the look of the park, are you seeing a lot of rundown homes boarded up? Or are you seeing the homes well taken care of? That tells a lot about the pride ownership. And the fourth one, very important one, is the actual financial economic structure of the deal itself. Is there at least a 3-point spread between the financed interest rate and your cap rate? So if the spread is too small, then there's not a lot of meat on the bone for you in the deal. So those are just some major ones. Like I said, there are 15. There will be a lot to go through the entire 15 of them, but I think those are the other major ones with the most heavy weights on them. Obviously the market, but that's another parameter with the different weights assigned to them.
Do you tend to buy turnkey mobile home parks or value add?
We're value add only, because for turnkey, you will get a cap rate of really low cap rates, and you will have good structure. It will be a stabilized asset, but you wouldn't be able to make as much money off of it. But you don't want something too distressed either. So you just have to pour capital in there to stop it from bleeding. So we buy almost exclusively light value add to value add mobile home parks.
Let's just take a step back and look at mobile home park investing in general. What is it about mobile home park investing that excites you the most?
I'm a firm believer in blue ocean strategy, right? So like I said, it's about competition. So at the beginning, I did it because it was the lack of competition really means the prices are not extremely overinflated, meaning that there isn't as much of a bubble for mobile home parks rather than other housing sectors where the housing market is extremely heated, multifamily is extremely heated, and certain markets are extremely heated. For me, mobile home parks, especially my niche, our niche, small parks, we are not in an extremely heated market. So it's really the blue ocean strategy. And that's really with any kind of asset class, it's number one is that you have to be able to make money on it. The industry has to make money on it. So the two questions is this industry profitable? So the answer to that is yes. Why? Is because this is an affordable housing industry, meaning that people who do not want to spend thousands of dollars on a mortgage payment or apartment building can have a different option for a less expensive option. The industry has a need in it. The mobile home park especially, the demand is ever growing, especially in this economy. People are looking for less expensive housing options. And number two is that the demand is always going to be there and growing because people want this home ownership, this American dream of home ownership. So they want that. Demand is there. Supply is limited. The reason being there are so many zoning regulations. It's almost impossible. It's extremely difficult to build new mobile home parks. So the supply is extremely limited. The legislatures or the county, the city, they don't want new mobile home parks. They actually want all the mobile home parks to be gone. They don't want mobile home parks. So supply is limited, demand is growing. By pure economics, there is profit to be made. And number two, like I said, is blue ocean strategy. And number three, another reason is that we want to be a part of the solution to solve the affordable housing crisis America faces, because it's only getting worse. And we want to show to the cities, and we have done that, to show the city officials, county officials that, hey, we're doing the city a service by, keeping this mobile home park, build private ownership, and solve this problem. And a lot of cities, I think, many cities across our nation face is affordable housing. People are not able to afford homes and they don't have a good housing option. So that's really the major reasons that we get into it.
Take us through an acquisition like that you might get under contract, and use a real example, one that you got under contract, what you saw as the value add and how you carried that out.
Well, we've gotten 26 so far and 2 more under contract, so 28. I think, like I said, this internal algorithm that we've developed, that's extremely important because that comes from the data history. It's just like machine learning. You feed an algorithm or software data to feed it, to make it more refined to what you actually want to achieve. So it's more accurate with time. It's an ever-growing process. So I think an example of a deal is actually one that we're selling right now is actually in Iowa, close to one of the major MSAs, which is important. Like that's number one parameter. Well, not number one, but one of the parameters important that it's in the market where it's closer to, it doesn't have to be right in the middle of the MSA, but you want to be kind of close to it. So that park is actually close to the MSA.
I mean, metropolitan statistical area. So it's near a larger city, basically.
Yes. So it's close to that. And the economic structure of the park itself is attractive. So we're buying at a 10 cap rate when we bought it. So the cap rate is the net operating income divided by the sales price. That's the cap rate. So it's assuming if you pay all cash for the deal, how much return you'll be getting. So that's attractive 10% cap rate. And that park is on public utilities, another a positive point. But then, like I said, many times at this point, I think we need to put that into our internal algorithm to calculate a result. But I think how we identify it, we actually bought that one straight from a seller without a broker involvement, which, can or cannot, could or cannot be sometimes it depends on which broker you're dealing with, can be a good thing or not a good thing. So we got a really good deal out of it. And the structure of the park was very sound. It was build back utility, so that's attractive as well. So overall, a solid deal from economic standpoint and operational standpoint. So that's when we decided to get into it for the cap rate, for the structure of the deal, for the location. And our internal algorithm also checked out for that deal, and it's actually doing really well. We're actually in the process of disposition, which really provided a great return, almost exceeding all of the projected returns we gave investors initially.
What specifically did you do to add value? Did you raise rents, figure out efficiencies? Give us some examples. So
raising rent in mobile home parks is almost a no-brainer because I think, what we buy from our mom and pop operators, they almost never really raise rent. So there is a lot of meat on the bone to begin with. So we raise rent pretty much immediately after acquisition. According to state law, we have to give the tenants proper notice. After we give notice, we usually raise it between $25 to $50, and that automatically drives up the NOI. And at the same time, you want to deliver on what you say you're going to do with the tenants, better, upkeep, cosmetic upgrades. We've done adding white fences to our parks, a new sign, and just to make the park more of a neighborhood, more of a community. So that's, I think, the number one, the most cost-effective way to add value. And another thing that we can do that we have done is infilling. So there are two ways to infill, meaning a lot is empty, right? And you want to fill a home in it. Right now, the way the labor market is extremely difficult to infill because of labor shortage. There's no general contractors. There's just not a lot of people working in the labor market compared to what it was before. But you can buy a new home or a used home and fix it up and buy the home yourself and contact a mover. And obviously you have to pull permits with the county and you move it to your park, increase your occupancy and also another lot rent for yourself. Or you can make your neighborhood really attractive. So people, tenants with their own homes, they want to move their mobile homes to your park. So that way you have a new lot rent as well.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. When you say infill and it's a lot easier to just buy a new or used home, you're not building a stick-built home on this lot. You're basically pulling in a home on wheels, a mobile home, essentially. How do you structure that? Are you expecting your new resident to buy that home and move it there, or do you do it and then sell it back to them on a land contract? I mean, how would you normally do that?
A lot of the mobile home parks, they're zoned as a mobile home park. So you actually cannot put anything other than that, not even the RVs, just mobile homes. So what you need to do, if you're buying this yourself, what we do is that we put the new home on our lot and sell it to the tenants using a tenant rent credit program. So similar to like kind of a rent to own, but rent credit program to the tenant. So, and a better scenario is not, more difficult in different ways because it's difficult to attract a tenant to put their own homes on, but it's not impossible. We've done it before. So the tenants actually buy their own home and just put it on our land. So that home is already theirs. They just pay us a lot rent. That's the ideal, like I said, ratio of park-owned homes and tenant-owned homes. You want more tenant-owned homes rather than park-owned homes.
I heard you say you've done 28 parks. What are the size of the parks? I mean, what's the scope of what you typically go toward?
Small parks that we focus on are usually between 10 lots to 25 lots. 50 lots.
So small parks, 10 to 50 lots is what I'm hearing.
Right. And there are bigger ones, but that's not really our niche. And those, sectors are usually extremely competitive and heated. It drives the price up.
What's the typical purchase price then of a 10 to 50 lot park?
So it depends on the area and the net operating income. So it's anywhere between, $65,000. We've gone $65,000 parks to, let's say, $400,000 or $500,000. So it really depends on the NOI. NOI drives the value and drives the profit.
To me, it seems like that goes back to your blue sky parameter there, because there's not as much competition on the smaller parks, whereas there is on the larger parks. You're able to find a lot of opportunity in that 10 to 50 lot space.
Oh, into the blue ocean strategy.
blue ocean strategy.
That's right. Yeah. But blue sky works too. So
what are you losing in economy of scale there? Because I know the larger players would say, hey, we want 100 lots or more because we want that economy of scale. What would you say to that?
there are advantages to small parks and disadvantages, but how you build economy of scale is to have small parks close to each other, right? So within the same MSA, you can have 5 different small parks, but they're all within the same MSA. So that makes it more efficient to manage. So what I say to that is that, in the small parks, we do have the higher cap rate. And at the same time, we can acquire the small parks in such a way where we do build economy of scale, such as the proximity of the parks to each other, even though they're not the same park, but they're close to each other.
Are you then building a portfolio of parks that are nearby each other that you can sell off that portfolio to a larger group? Is that part of the strategy?
Yeah, to a larger group, or the buyers of our parks are usually, they're not extremely large. They can be, just mom and pop owners who want to scale with their portfolio. And that usually turns out really good as well.
What are the MSAs in the areas where you're buying?
The MSAs, we have a pretty heavy presence in the Midwest and the Southeast. So those are the primary markets that we focus on. I think we have a lot of parks in Iowa. Iowa has a really strong presence in the Carolinas, North Carolina, South Carolina. So we actually have a lot of MSAs that we're into, but those are the states that we're most heavily involved in.
What's the lending situation? Do you have lenders that are happy to work with you on each deal, or do you have to go find a different lender each time you buy a park?
We've acquired most of our parks, all of our parks actually, through either cash deal, because they're small, dollar amounts are small, right? So that's another advantage. The closing timeline is faster because we're smaller, we can move faster. And we don't really require a lot of lending. We're either on seller financing or cash deal. So makes the loan process of a deal extremely easy.
We said that you raised almost $5 million from investors. Are you able to talk about your investment structure and how you kind of work that out with investors?
Our deals follow a waterfall structure. So we have an 8% preferred rate of return. And for, investors investing bigger amounts, I've got an investor who invested over $2 million single-handedly. So that, we have some preferential terms for investors with bigger amounts. So, but generally, we are waterfall structure. For those of you, unfamiliar with waterfall, is pretty much a way to, is a really good way to align the sponsor, which is us, our interest with the investor's interest. So we have an 8% preferred rate of return, and the preferred rate of return is that means we don't get paid until you get that preferred rate of return. And we have a 8% cumulative cash on cash preferred rate of return of 8%. And every year that resets. So it's actually a little bit complicated. So give me a call. We'll explain more. So, but after the 8% is met, we'll get a, capital split. Any profit after that will be split 70-30. And the next waterfall hurdle is 12%. And after that, it will be a 60-40 split, 60 being investors, 40 being us. And then it jumps by another 4 points after that hurdle is 16% hurdle once we meet that in a particular year. So this renews year by year, resets every year. So that'll be 50-50 and it stops there. So all distributions are, split that way. So that way we align the interests of sponsors and makes us work harder for that return.
So it sounds like you have a stair-step return structure where the equity shifts in your favor, the more money you're able to pay the investors.
Exactly. Yes.
What's the ultimate goal? Where do you see yourself going over the next 5-10 years?
The ultimate goal is that we are scaling. We're scaling rapidly. And the ultimate goal is that we have, multiple funds for a core plus funds to serve our investors. And also that, we're building economy of scale through that as well. And we'll be able to acquire deals faster and just build a bigger portfolio. So, and to get more investors to know about us is essentially we're delivering a financial product for passive investors. And then, so they can, get on with their busy lives and do their professional jobs efficiently. And at the same time, their investment portfolio, provide them with access and the ability to have a good return on their investment.
So, Charlotte, as a first generation American, what is your outlook on success? And how is it different from someone who was actually born here in America?
I look at the American soil, America as a country, as a super fertile soil. And all of us are a piece of seed that needs to be planted into the soil. And compared to those who are born here, who already got planted here, that's an advantage. You have a root here on the soil. You have lots of resources, and this soil is setting you up for success. If you're willing to work hard for it. For me, as a transplant, I did not have any roots here. I was planted here later on, but I got to experience the vast difference between what America has to offer from where I came from. So that makes me a lot more appreciative of the opportunities and resources that are offered to me here in this country. So I think success is, very much achievable, and it is extremely important for people, I guess, who are born here to understand that you have everything that you need to succeed. You just have to work extremely hard to achieve that. And so that's my perspective. I wake up every day being appreciative and grateful for all the things that this country has offered me and is still offering me. So I think success to me, that almost feels like an obligation at this point.
Give us an example of what you mean by that. Like, what do you see that other people who were born here don't see when it comes to opportunity and success?
Right. So, for example, real estate. From where I'm from, you cannot legally, personally own real estate. Everything is leased from the government for 70 years. And even your own house, you cannot own. You lease from the government. Everything is publicly owned. And here, you can own things. You can become a landlord. You can buy real estate properties. The system is set up. In China, there is never a process. There is a process, but you cannot simply follow the process and get something done. To start a business, the costs in China and in a lot of different countries is vastly more expensive than what it is here. And here, if you want to start a business, you simply go to the Secretary of State website and pay $100, and that's it. It's straightforward. It's simple. It's set up in a way that you can succeed. So those are just two very small examples. Let alone the trust between people, the credibility, the laws that's structured to help entrepreneurs like me to succeed. So that's what I mean by soil. In China, it is a communist regime. So it's not built for capitalism. So capital doesn't thrive over there. And it's extremely difficult for someone that came from nothing to do anything major over there, unless you already have the relationships with the bureaucracy. You have to bribe, you have to do a lot of different things. But here you don't need to deal with that. Certainly there are corruptions everywhere, but I would say in the United States, that's not even on the same level. And you do have the opportunities to thrive.
Tell our audience how they can find out more about you and or get a hold of you.
Best way to reach out to me is to go to our website at johnscreekcapital.com or search my name, Charlotte Dunford. It would be linked to my website, and get connected with me on our website and, fill out a small form, and I'll usually reach out within a couple hours. I would love to get connected with you.
Well, Charlotte, thanks so much for coming on the show, talking about mobile home park investing. You're doing it a little differently than other people I've talked to, focusing on the smaller parks, building scale, and just the fact that you come from that engineering background and apply the analytics of 15 different points that you look at. Thank you for sharing some of those with us. And it's been a real pleasure talking with you today.
Absolutely. Same here. Thank you.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.